Good morning and welcome back to Almus Market Mornings. We are once again closing the week with broadly negative sentiment. Geopolitical related flare-ups remain a big risk. AI-driven pockets of bullishness seems to deflate once again. While domestically for India, the story once again for the rupee has turned for the worse as the exchange rate trades above 96 with a depreciating bias. So these are the broad themes. Let's understand more from JK. Uh, Morning, sir. As we close this week, what are some key takeaways for you and something you would watch for this weekend?
Sure. Good morning, Swaraj. So we, of course, had some important data points this week, as well as Kevin Moore's testimony, on which there was a lot of focus. But yes, the inflation came down, and that was a relief for the markets. At least not, as concerning as it was before, though. Broadly, it is higher than much higher than Fed's target. Therefore, rate hike prospect is still around. And the reactions of the markets are quite muted, and even particularly the yields where there is a lot of focus, they had dropped, and again they have bounced yesterday, particularly after the retail sales report, which reinforced that the consumer demand is quite strong and supporting a strong economy. Particularly the control group, about which we often mention, which goes into the GDP calculation at 0.5% rise and at an annualized pace of 9.2% for 3 months, is also very strong. So combined with the initial jobless claims that also fell to a 10-week low, data continues to point to a resilient economy with labor market and consumption both doing very well. So from that point of view, the markets have actually been once again on the rate hike side, though there can be one hike definitely in September. How much it will be followed with, where to see. Also, the June CPI and PPI readings, which came quite soft. Again, some people are, or many are still considering whether it is a one-off disinflation print or beginning of a sustained trend. Some Fed members like Logan yesterday also acknowledged the same. Even if the commodity shipments resume soon, there's still some pressure that can continue on the consumer pressure, because capacity constraints at refineries will keep the prices elevated even if there is a increased supply. And industries like airlines are also seeing strong demand, and they're not. I don't think they reduce their prices in a hurry after having increased it recently. And we still have the AI investment related inflation, which is still. So we after the two reports which gave some relief, we are still not very much back in the benign state. We are still in that state where the yields can be rising, and the rate hikes backdrop is there, and that's what reflected even in the stock market also, which is not really rallying now. See, while we are not falling big, at least in the US markets, perhaps held back by the earnings reports, still not falling away. US stocks are still well above even the correction territory of 10%, particularly the Nasdaq. Although if you look at the Japanese stocks, they're into correction territory. And if you look at the Korean stock, they're actually in the bear trend, having lost more than 30% from the peak. So there is, wherever markets have overdone, they are actually correcting. And one of the influences is definitely coming from the bond market. In meantime, geopolitics attacks and counterattacks from US and Iran have continued. Both are aiming to gain control over the Strait of Hormuz. Oil is consolidating at elevated levels. Did not make a new high, but it's still consolidating at the higher level and awaits further developments. And there was some focus on President's address today, but the speech was dominated by election security and domestic political issues, a very passing reference to Iran and economy. Nothing for the markets to take away. So that's something that no trigger coming from that as well. Continued ranging movement in the dollar. It's holding above the key support at 100.5. Uh, UN is now again pushing towards 40-year high, rather USD yen, and prospects of official action is something that cannot be ruled out in some way, either direct intervention or some policy move. That's very likely. Um, and of course, there was also from data from UK which was quite mixed. GDP growth was better, but the manufacturing and other areas showed weakness. So pound, which was outperforming, has seen some profit taking coming off from the highs above 1.35 levels. Euro has been weaker after European gas futures have risen to their highest level since March. So that's stoking fears of economic slowdown in the region. The expectations of near-term rate hike by ECB is also gaining ground once again. May not be in July, definitely, but the next meeting could see another hike by Europe. And with the kind of fragile economy that Europe is, uh, how much they can sustain a rate hike. It's unlike US, where I think the economy will still do well with another one or two rate hikes. But in Europe, it's quite different. So that's what concerns, and that's keeping probably the euro also subdued, even relative to UK, because UK is a much smaller economy if you compare with the overall euro region. So I think we are in a state, in the global markets, where we need some new trigger. It can come either from geopolitics or from economy. Um, Possibly the summer time is also setting in, so the markets are not really moving uh, in all the sessions. Most of the moves do happen in a jiffy in New York market or in New York Europe market, and then goes into a sleep mode. That's likely to continue. For the INR, we're comfortably perched above 96. And interesting to note that we have made new highs, new marginal highs every day in the last 4 days. So that's clearly dampening the sentiment. Now we are trading actually above the level at which the government RBI announced those measures to attract capital, and that should be somewhat concerning to the policymakers, mainly with geopolitical negatives also ruling. So I think the uncertainty of the flows, as well as the geopolitical concerns, should weigh on the rupee, continue to weigh on the rupee. Not seeing much inflows, particularly from even the corporates are now more biased on the buying side. So won't be surprised rupee continues to make upside attempts, dollar rupee, I mean. But what authorities do is very important. I think they have bought time by announcing those measures last month, and it's not inconceivable that they would have expected this uptick once again to happen, because geopolitics was never, subsiding. So I'm saying that could be more measures. At what level they come from the government or RBI is what we need to see. So it's kind of wait and watch for the markets now. Something to happen, and then still then maybe a long period of consolidation is also likely, particularly because participation is now slightly thinning. Thank you.
Thank you, JK. And yes, we'll all have one eye on the geopolitics, and there's an active effort by both US and Iran to continue to try and control the Strait of Hormuz. But back on the economic news, something interesting is, of course, the retail sales, which was released yesterday. Even the control group, which goes into the calculation of GDP, it rose quite strongly. So the picture that is forming is that the US economy still remains quite resilient, with labor market and the consumption doing quite well. Uh, European gas prices are higher now. Europe as economy, EU as economy is already quite fragile. And as JK mentioned, even if US raises rates once or twice, the economy will still do relatively fine. But that's not the case for the EU. And there are now rate hike expectations also building up because the energy prices are higher, and the expectation is that ECB might hike rates not the next meeting in July, but post that. And domestically, rupee again, USD INR trades above the level where government and RBI had introduced capital measures to bring in inflows, and this is concerning. We are comfortably trading above 96, and of course, everyone is awaiting substantial flows. That's it from us today. Thanks for listening. Have a great weekend. We will catch up on Monday with a fresh round of updates.